stock, it could be used by an investment banker, it could be used by the corporate finance department within the company, it could be used by multitudes of different types of entities, usually the marketing and the investor communications department, marketing department, communications department. They work with the analysts and the individuals to be able to produce a high quality report like this. This is called the deck, okay, or a pitch book, all right? It's called the deck or a pitch book. Anybody ever heard of a deck or a pitch book? Yeah? This is what you use when you make presentations to boards of directors, senior level executives, your peers, your clients, communications outside of the firm, inside of the firm. You're going to be basically doing that in your careers. You're not going to be taking multiple choice exams, okay? You're not going to be taking exams when you go to work, okay? You're going to be producing product, okay? They're going to give you a problem, they're going to give you a process, you're going to replicate the process, you're going to solve the problem, and you're going to make the presentations through communications to senior level managers, clients, and the investment committee or your peers. Okay? And you're going to do it over and over again. It doesn't really matter what product or industry that you're in. This is basically a standard approach. That's why they teach it in business school, particularly in grad school. And that's why we're doing it, so that you can walk away from this class with not only the understanding of the finance and the economics, but you have the memos. Please do not take the memos lightly. A lot of students think the memos aren't a big deal. They're actually the deciding point if you get an A or not in the class, okay? And you need to work with me on those. The pitch book is extremely important because if you have the memos and you have the pitch book, you can use those as a part of your portfolio when you're interviewing to be able to show the potential employer for an internship or a job that you actually know how to do this stuff and you actually understand the content, okay? I asked Sarah Vitale to come today. I'm a big fan of Sarah's. She's amazing. She's the business reference librarian here at the library. Does everybody know Sarah? So I bring Sarah in for about 30 minutes, every semester at this point to basically walk us through the procedures that you'll need to go through to collect the data to be able to conduct the analysis. What I will do on next week is I will walk you through the valuation process, but you should start putting together the PowerPoint presentations now, okay? Collecting the information that you need to focus on Bank of America. And then I will do the valuation work. I will walk you through it on how to collect, and actually Sarah will help us do this, collect the financial ratios that you're going to need to be able to conduct the peer group analysis, to be able to look at the overall financial condition and position of the firm. And we're going to need historical earnings per share, which is what we're going to use as the numerator or the metric, or the cash flow, to be able to do the valuation. We're going to run through the 4 intrinsic valuation methodologies, which I should have pounded into your head by now, so it should be pretty much rogue at this point in time. So if we can get the 2019-2020 projected earnings per share, we can calculate the intrinsic values pretty quickly. If we get the price to earnings multiples or PE multiples for the peer group, going back 2018 to current and do a projected 2020, we can apply those multiples as a sensitivity to come up with valuations using the multiple approach. Then what we will do is we will do a 5-year holding period. We will project out the earnings per share for B of A. We will discount that back to the present to get the intrinsic value. And we will run through the 3 different weighting scenarios that you did on your exam. We will do that, come up with the final intrinsic value, make either a buy, sell, hold recommendation, and then give the trade recommendations as the last part of the presentation. I will walk through the presentation a little bit more after Sarah does her thing, because I know she's really busy. But please watch. I'm recording this, and I would probably be following along on your computers so that you know where to go get the data and you know how to get it. When you do the report, just a little caveat, please. Some of the reports are a little out of date, so to copy the data directly from Wells Fargo as B of A or Goldman Sachs or JP Morgan as B of A, don't do that. I've had students do that. They run out of time. They panic. because they just don't have time to work on it, and they slap the thing together at the end of the semester, and they think I'm not going to know that, you know, the Wells Fargo data was the B of A data, or the JP Morgan or Goldman Sachs was the B of A data. So you got to actually go through and put this thing together. It can actually be done very quickly if you're organized and you know where to get the data and start putting it together and start getting it in front of me so I can take a look at it. But if you wait till the last minute and you blow everybody off and kind of, you know, push it out to the last minute, then you're going to be scrambling to get it together, and you'll probably embarrass yourself at the final presentation, you know, the week before finals. Okay, so this is the real big push. The homeworks are really small. You know, we'll probably do the problems on Thursday. That's it, and then we'll focus on this, you know, going forward, and then wrap up the semester. So you should have plenty of time. If you work with me on a one-on-one basis, you and your teams, to produce this thing, it's going to be great. If you avoid me, it's not going to work out very well. Okay, it'll look really funny, and then when you do your presentation, you'll embarrass yourself in front of your peers. Okay, so take it seriously. I got Sarah, and action.
Oh, action. Okay. Second time I've been in front of a camera this week. Oh.
Oh, really?
I'm not prepared.
Oh, you're so photogenic. Thank you.
At times, I guess. So, I'm here to save you time. That's all of what I'm about. I'm about efficiency. When I go into MBA classes, we've been doing this kind of stuff in our careers for a while. We know how to do it. I'm like, I know you know how to do it. I'm here to show you how to do it quicker. All of the data that you need is publicly available. It has to be. That they have to report this to the government. So you could go through all those filings one by one and pull out the data and put them in a spreadsheet. Or you could do what the professionals do and go to one source and get them all. We have those sources for you. We actually have 3 of those sources just in case one doesn't quite work or doesn't give you the exact ratio that you need. So hopefully at this point you do know this page, the library website. We've been doing a lot of manipulating of it so that all the important stuff is right there and you can see it. The research guides, formerly known as subject guides, are still the place you want to go. And the one you'll want is business administration. So there isn't one for finance. I was going to do that because it was a little bit easier to remember to go there, but just a lot of duplication of information. So all of this information is important. Articles about the business, you can go and see what's happening in the news. You can see case studies about them, but really what we're going to focus on here is the company information and the industry information. Those are the professional databases that we buy to give you the data. Easy in one place. I'm going to start off with the company information tab. So again, this is under business administration. We're going straight to the company information. First one on the top of the list is our most expensive database, single most expensive database. I could go buy a car with this one, but it is worth every penny, and grad students are usually like, yes.
A Porsche. You can use a Porsche.
Not a great car, but a car. So Mergent Online. Their tagline is, caution can result in saved time. I'm like, that's a good marketing tool. I just saw them at the last conference I went to, and they're like, yeah, that one, that was a good one. Whoever we paid for that one was good. So this seems simple. How many of you have used Mergent before? Okay, so only a couple of you. So this will be one of your new favorite things when it comes to finance. Best way to do it, so this includes all information that it needs to be publicly reported by public companies. So all of your banks are public. Has some international, very few private, because they of course don't have to report. Easiest way to do it is search by the ticker. So just Google what the ticker is, or at this point I will give you a hint. Bank of America's ticker is BAC. If you just type in Bank of America, you'll get all their publicly traded different funds and such. So if you put in their ticker, Bank of America Corp, there it is. Click on that, and here you go. Some of this stuff will look really familiar since you've been looking at the previous reports. You can get the key executives, you can get their salary. If you click on the key executives, you'll find out a little bit more information about them. They've got photos, they've got their history. This one is since where they got their education, what their experience was before, You can also see how much money they make. 1.5 million last year, but really took home 22 million. Good to be that guy.
That's really important because you're going to be pulling the pictures. You need 6 leaders. If you look through the presentations, there's 6 leaders. You're going to need to know their name, their title. You're going to need to know what graduate program or where they went to college. You're going to need to know where they worked before and how many. You're going to need to calculate how many years they've been with the bank. Okay.
So all that information is here. You can find some of it on their website, but sometimes they don't want their executives to be that easily found on their public website for reasons that are obvious right there. This only shows the top few, but you can then look at executives. You can see. From this tab,
sorry, you mind if I interrupt you?
go ahead, please.
Please do not put the board of directors up there, okay? I've had students over the years put board of directors. Board of directors don't do anything.
Yeah.
They basically just rubber stamp what the CEO and the president of the company does.
Yeah.
We want people to actually
Key
generate
officers.
revenue within the divisional lines of the company.
Yeah, so these are the key officers. There's a director's tab up there, and there's a committee's tab. Those aren't as important for this issue. You can click on their names, see a little bit more about them. You can download a PDF about them, all kinds of interesting stuff. You can also, let me click on this person. Down here at the bottom, you can also see their insider holdings. So if they are buying and trading their own stock, that has to be reported. Merchant puts that all in one spot. And you'll see it's pretty up to date. So he last got some, let's see, he last disposed of some stock in March. So it's up to date. So that's one of the parts you'll need. You can find other things about who their competitors are. You can find out their other reports. But here you go. Here's the time saving. Company financials, all in one spot. I'm not a finance person, so I can never remember what's on a balance sheet versus an income statement versus all that. So I always just default down to the all sections. It defaults to 5 years, so I think you have to go 5 years. You can do more. You can do all the years Bank of America has existed, at least in its present state. But I think 5 years is what you'll need. Refresh, and there is all the data right there. You can, of course, download this as an Excel spreadsheet, so you can do your own manipulation there. I can, again, never remember where something is, so if we need to do earnings per share, I just, control find, look for earnings. We've got net earnings, previous earnings, retained earnings.
What are the 2 earnings per, you're gonna need the earnings per share. So what are the 2 earnings per share that we have in a time series fashion? I think I'll take diluted or
Weighted average of year-end outstanding. Net earnings per share, basic, and share diluted.
yeah, I'll take basic earnings per share, and then can we go back like 20 years or something like
We
that?
can. So you can see there, that's where they are. If we want to go back 20 years, easy to do. Switch this to 15 years or all years available. And there they are. So
And how far back does it go? Can we find them and go back and see how far back it goes?
Goes back to 1982.
Perfect.
You'll see there's lots of blanks here. That may have been something that they didn't have at the time. They obviously, if it's available, I have to report it. They can't just say, oh, that was a bad year, and we're not going to say it. This just means it wasn't applicable that year. But there you go. There you get all of the data right there. Export it to an Excel thing and do your own data manipulation there. Okay, so that's the important thing, is you can switch the years here, and you can also show all sections instead of just going the balance sheet and the cash flows and all of that at one time. The other thing you'll notice, there's layers upon layers. This is an onion. We're just in the straight company financials. You'll see right there ratios. Well, you won't see because it's really tiny, but there
You
is
should
a
be taking
section
notes
of
on
ratios.
Unless you know exactly where this stuff is.
And here
What
you go.
happens is people come back to me and they ask me where the stuff is because they're not taking notes.
And you can always ask me as well.
Perfect. Thank you.
They're the ratios. Not every ratio known to man is included. They've actually added a couple in the last few years. I like to think it's because we asked, but I'm pretty sure a whole lot of institutions have asked. But by popular demand, they'll add in new ratios and they'll do the calculations. Sometimes you might have to do your own calculation, and that's what you're in class for, and that's what you have the textbook for. And that's what you have your professor for. It's like, how do I calculate that ratio? If it's not included, that just means you're gonna have to do it on your own. All the data you need to calculate the ratios are included in the main sheet. But there we got return on investment, we've got cash flow per share, book value per share, debt to equity, we've got all the biggies right there.
Yeah, we're gonna be using, the ROA, ROE, net interest margin.
Is it here?
And then do you have like a debt to equity ratio?
We did have that once, or is that the one we didn't have? They still haven't added yet.
I'll take debt to equity or debt to.
Yeah, debt to equity.
Okay, got it. And
That's
then-
one they've recently added.
And
That
then
one's right there.
the PE multiples, you're gonna need those.
Where were the PE multiples? Because those have thrown us for a loop.
And we'll need those for the peer group, and you may wanna write this down, the peer group. Subject firm is Bank of America, and then the peer group is gonna be JP Morgan, Wells Fargo. JP Morgan, Wells Fargo, Citigroup, and Goldman Sachs. And they'll teach you how to calculate the weighted average peer group ratios.
So all the data is there. You can easily switch over since you know which other ones you might need to compare it to. You might need data from them. You can just go quickly up to change company, type in the new one. Goldman Sachs, that one is GS. That one's an easy one. Citigroup's is actually the easiest one. And you've got the same exact kind of information, the same format, same everything. You can just copy and paste over the tables because they're exactly the same. They don't change. Got all your information there. You need to see Citibank, that one is just C, or Citigroup. There you go, there's all your information there as well. So you've got your standardized, you've got your ratios, there's some basic analysis. Oh, no, that's the EPS, that's right. Standardized, so take a look at all these little guys here, because we always find something in one of those tabs. Almost everything you'll need will be available in Merchant. Closest we have to one-stop shopping in this field. Any questions? It's a lot of data. It's kind of fun to look through. You can see the ebbs and flows of it. I always like to see how it goes up and up and up, and then phew, and then you look, you're like, oh, that must have been 2008, and then you look, like, oh yeah, 2008. The data does tell a lot of tales, and that's what's interesting about working with businesses. The numbers actually can be translated into what's happening. The other thing I wanted to show you is so this is one, they're quantitative. It's one report, they clean the data, they make sure it's correct as reported. So that's the question the MBA students always have, is this data correct? Well, it's as correct as reported. So if you look back at Enron's data from 2000, it's gonna be incorrect, but that's because they reported it incorrectly. They make sure it is as clean and correct and no typos as possible. We pay them a lot of money to do that, so that data is correct. They don't put a lot of evaluative information into it. They just give you the data. D&B Hoovers is a little bit different. They give you the data, but sometimes they also give you a little bit of qualitative information as well. So they'll give you a little bit of narrative, like they're doing well, this is one of their strengths, this is one of their weaknesses. Again, this is also useful for private companies, which you're not doing in this class, but if you need a private, this is going to be that way. You can look up by ticker again. We got Bank of America Corporation. You're going to get these annoying little things. I had planned to yell at them at the conference about that, they weren't there. But you get more information there, same kind of information, but you'll also get some business descriptions. You'll see more about their industry, so you can look at industry information. You can also see who they own, what their corporate family is, who their competitors are. There's a little bit of a SWOT analysis there. So you're gonna get a lot of the qualitative information there. Of course, these are specific analysts, as you all will be. They may be correct, they may have a different interpretation, you know, take all the qualitative information with a grain of salt. Because of course they have of one opinion, you might have another. So just as your books will be an evaluation, they have made an evaluation, and they may differ from yours. So just because they have this, you don't want to just copy and paste this one in. You want to see, I don't know if I necessarily agree with that. So that's D&B Hoovers. Those are the two big ones you'll want for company information. And the final one I want to show you is, again, it's going to be a little repetitive with the data, but is an industry information. Actually, you might be able to get it from company. I think I added it. No, I didn't. We do like to keep them separate. Oops, sorry. I don't say industry. I mean investment and stock market. So skip over the industry, go to investment. Morningstar Investment Research Center. That's another one that's a little bit more qualitative. They'll have a lot of data, but they'll also have some qualitative information as well. So get to know your tickers. Bank of America. That will happen sometimes. Just hit enter again. Just hit enter until it opens. We don't know why it's doing that. They don't know why it's doing that, but it does work. And here you get a little bit more qualitative. You know, because they assign stars. They're a pretty significant investment research firm. Very big in San Francisco. That's one reason we went with this one versus some of the others. They give it 3 stars. They're talking about not the company, but the stock. So do we want to buy it? Another set of analysts. You may or may not agree with them. So you can see the stock analysis and see what they have to say. Consider buying this amount. Consider selling this amount. This is where that is right now. Here's some evaluative information. You may or may not agree. So always double check with that.
Do the analysts give forward-looking earnings per share?
They may and they may not. It really depends on which analyst and which company. For the big banks, they probably will, because those are significant ones.
Is that the only place to get estimated 2019 or 20 EPS? Does S&P provide that?
S&P may, so I'll show you that one as
Okay.
well. So you can go to the valuation, and yeah, they don't do forward for this one. So they just have the last one, and then TTM. What is TTM? I don't know, but they have that one as well. So there you go. So those are the big ones to really know. Merchant, D&B Hoovers, and then Morningstar. Net Advantage, Capital IQ, that's Standard & Poor's. That's another super big name, well known in the field. Again, if these other ones don't have looking into the forward and you need, maybe S&P will. It is really hit and miss whether they decide to do that or not. This is mostly used by the grad students, as you can tell. It's not super user friendly, but it is easy. You can just search up there. Let's see, back. And here you go. So I always like this because it looks super technical. Makes me look important. But it all is basically the same information. The ratios, cash flows, key statistics, peer comparisons, they have that one as well. They also have some people information. I know you can't see that on the screen, but if you're following along, you can see it. They'll also sometimes have, let's see, oh yeah, here are all the rest of key financials. So sometimes they'll look forward. It, again, depends. It's not set in stone whether they decide to do something forward or not. So those are big ones. They're easy to find because they're the top ones under the company information and investment stock market information. Value line is more consumer based. Sometimes we keep it because we tried to cancel it and then they gave it to us for like pennies. We're like, okay, fine, we'll keep it. And it does come in handy once in a while. There are limited users, so don't all click on this right now because we only have like 3 simultaneous users. And if we all click on it, it will lock you all out. Sometimes this does have other pieces, other ratios that the other ones don't include. So it's always worth looking at all 4. We have one-stop shopping in Merchant, but why stop there when you can comparison shop? Kind of an important thing to do. It's like even though we can one-stop shop on Amazon, we always click on the other things to see if there's another cheaper one somewhere else. And there you go. So another set of analysts, they give this one a B+. They give it a 3 on a scale of 1 to 5, which really would be a C, wouldn't it? A gravy flake. But again, all the same information there. Ooh, look at that. Projections. They have projections. So some will have it, some won't. It really depends, and it's why you have to check in at multiple different places. Earnings per share. They expect their earnings per share next year to be 2.75. They expect it to be in 2023, 3.25. There you go. There is your forecasting. Okay, questions, concerns, gripes, or complaints? It will save you time. It is as up to date. Mergent is as up to date as reported, so it's updated every quarter. If they've, if a company has submitted a correction, they update it right away. They're really, really fast. That's what they do. As long as it's East Coast time, because they're North Carolina, and if something weird happens at 5 p.m. our time, they do it 8 a.m. the next morning. 8 a.m. their time the next morning. We ever have problems with them, I have to call them, and they have fantastic accents. I do love calling Mergent. I think I'm on the first name basis with some of those people. Mergent's down again, okay. So, Mergent's the big one, D&B Hoovers, then go down to the investment stock market information, Morningstar, Standard & Poor's, and Value Line. Everything you need will be in there. You shouldn't have to do any Googling for this kind of stuff. And my caution against Googling, when you're looking for this kind of information, you're gonna get old stuff. The way the weird algorithm and spiders work, you'll get top news, but when you're looking for data, you're usually gonna get year old or more data. I don't know why, someday they'll fix that, I'm sure. But for now, these are gonna be your most efficient ways to get that information.
And then is there a link there other than the investor tab on the company's website that gives you access to the quarterly analyst conference calls?
Mergent will. Mergent has all that stuff, so let's go back into here. Would the FCC, or not FCC?
SEC.
SEC, sorry, thinking in my communication brain. They should have it as well.
Usually they have it on the investor relations tab on their website.
Yeah, that's a good question. Yeah, they just have the filings here. Somewhere I definitely have seen the conference calls, because I've listened to a couple of them and they're hilarious. As long as you own stock, you can be on that call. There's always one grumpy person who's like, I own one stock.
One crazy person.
He said it, I didn't. That just rails on something. It's like, all you have to do is own one share and you get to be on that call. Yeah, and I think that's once when Elon Musk completely went off and he's like, oh.
He was drinking and smoking pot that time.
He did sound inebriated of some type. But yeah, all you have to do is own one stock of Tesla and you get to be on the call. Get to be on the phone with Elon Musk. Varying states of inebriation. So yeah, that's a good question. I'm not positive, but I know, yeah, their website will have it. The SEC may have it as well. I do listen to some of those because they are wacky.
And would you show us the industry ratios for Mergent and IBIZ, and do you guys have
Yes.
the S&P industry report?
We do. So that's probably why I was thinking industry information. You can only know how good your company is by how good the industry is. Like, example we always give, Blockbuster. Blockbuster was a great company until the industry died. You need to know what's going on in the industry. So we have IBIS World, we have First Research, D&B Hoovers also does some industry information. You have to click on a different tab. Standard & Poor's, Net Advantage, Capital IQ, those are gonna be the big ones. I always start with IBIS World because it's, you know, the easiest one and my favorite one to use. It will have a lot of qualitative. That's the whole point of IBIS World. These are industry analysts who write these incredibly detailed reports. So I think it was commercial banking.
Yeah.
Commercial banking in the
Yeah.
US. and you'll see they are pretty up to date. Nothing's over a year old. So yeah, December 2018 tells you who the analyst was, so you can go and do some research on who presumably he is, Anthony. If you go down to the key statistics, here are key statistics. So they've done industry ratios. This isn't for the company, it's for the whole industry. So you can compare how is Bank of America doing compared to the entire industry in their earnings per share. The earnings per share for the industry should be this, and this is where we're at. Are we in the right place? Is our revenue in the right place? What are our wages, and then all of these guys. So it's the industry financial ratios all the way at the bottom. Those are the big ones. That's where you're going to get pretty much everything you need right
And
there.
is there, ROE, ROA, net interest margin?
Should be in here somewhere. There's quick ratio, that's always a good one. But they're buried in there somewhere. And you're the professionals now, you get to figure out where they are. But they're on this page somewhere. And if they're not, come see me, because we'll try to figure that out. So IBIS World is the first one, Net Advantage, Capital IQ. This will look familiar, we were just in it. I have the wrong link in there. Let me go back to this one. This is also one I was hoping was at the conference to yell at. I'll go back and fix that link. Same stuff here. So you can do, I think it's research, and you can look at the industries. And there should be one for commercial bank. Let's try it. Commercial. There should be. And if I can't find it now, I'll send it to your instructor, and the professor can send it out to you. So it's in there somewhere. It's a hard one to pull up just right off because it's so complicated. So don't forget industry. You've got your company, you've got your industry, you are set with data. If you can't find something, if something's acting a little weird, you forgot what I said, that's okay. There is that scientific study that says you have to hear something 7 times to remember it. I don't know if that's true, sometimes I need more. Ask us. That's what the librarians are here for. All the librarians over there, I can say this with certainty, know how to do this because I have trained them a lot. I have set them down in a room and have taught them how to do this. So you can just ask over there in the corner, give us a call, send us a text, walk in and say, hey you, I need this, where is it? And we can try to be nicer than that, but and we'll try to get you in the right direction. So ask us, that's what we're here for. Okay, so that's quick and dirty, everything you need to know. Happy hunting and happy valuating, or evaluating. Evaluating?
Evaluating.
That is valuating.
Great, thank you so
All
much.
right, and I'll see you in half an hour.
Great, thank you very much. All right, so let's spend a little time, let's go through presentations. Okay, so you can take notes and get a clear view of the expectations here. Okay, so first thing is I will call over to the print shop. Did you have a question? Yeah. I will call over to the print shop and have them order the binding material, okay? The binding material, it's got to be exactly like this, okay? Every semester I get 1 or 2 people that want to bind the report the way they want to bind it, and that's not the way it works, okay? Usually when you go work for somebody, they have a specific way of doing things, and they're not going to deviate from the way they've been doing it over the years because you want to do it differently, okay? So this is how it works. The first thing is a clear cover, okay, like this, all right? Not like this. And this is an opaque cover. Can you see my face through this? Can you see my face through this? No. Okay. So basically by using an opaque cover, you basically dilute the first page of the report, okay? The first thing that the reader sees, you make it hard to see, okay? Make it easy for them to see, okay? So it's gotta be clear, okay? And then the second is you have to have a plastic wire binding just like this, okay? Not a different type of plastic or some other type of binding. It's gotta look exactly like this, okay? And you have to have a black cover, black back, just like this, okay? They'll have the materials, that all you gotta do is go down there or send it to them, they'll bind it up for you. My recommendation is as I sign off on these things, I would run down, have them printed, and you might wanna make some extra copies, okay? Usually most students, what they'll do is they'll just print out one copy and then submit it. It's the leader that's gonna submit the final bound copy. Usually what they do is they submit it, and then they call me back like a semester or two later, and they say, Professor Souza, do you still have the bounded copy, that I gave you from 2 semesters ago? I might not, but didn't you make an extra copy for yourself? No, I didn't. You might, if it's a really good report, you might want to make yourself a copy, okay, that you can basically present to a potential employer. You can lend it to them, but don't give it to them, okay? But if it looks like it's a really good job and you're gonna get paid a lot of money and go on a career track, give them the copy. But I would probably bring a few of these into the interview, because you're probably gonna be interviewing with multiple people and you wanna be able to walk them through the presentation like you would when you're working for them, okay? Yes.
2 questions. One, where's the print shop?
It's underneath the power plant where the School of Business is. So if you go right out of Galileo on the other side, the power plant's right there. It's got a big old stack. And you go around the side and you walk down the driveway. And it's underneath the School of Business in the power plant, down the driveway around the back. Yeah.
Okay.
Yeah.
And then second question, when we're taking our projects, do we have to can we just drop in?
Yeah.
Okay.
Yeah, I usually call them like a week in advance, make sure they have all the materials. And then I tell them, look out for BizAd 123, and the 135 class. They'll be coming down there with their flash drives or whatever, and providing you with the templates, the file, and then they'll be able to print them out right there and then bind them.
So how long do you usually take them?
Usually they can do it in a couple of hours.
Okay.
It usually doesn't take that long depending on how busy they are.
And
And it's pretty cheap. I think it's like $7 or $8 or something like
I
that.
was about to ask that.
Yeah. So it's really cheap, and they do a really nice job too. Okay. Any other questions? No? Okay. Look at the first page, and what does it tell you?
Buy it, so.
Yeah, it basically tells you what the bank you're valuing and what the recommendation is right off the bat. And ideally, it should look like this, where you have the intrinsic. Everybody messes this up, but how many of these things do you think I read a semester?
A lot.
Yeah, I read like 60 of them, right? And imagine if you were working in a bank or an equity firm or a portfolio firm or a public or private equity firm or, a family office. You're probably managing portfolios, maybe 100, to 75 firms in there, and you're doing one of these for every single one of them. So I gotta basically look at least 100 of these things, maybe 300 of these things, every quarter, maybe up to 500. So if you start changing the formats around, I know exactly where the data is, where to look, where to check, I know exactly where to go, but if you start changing up the format, it kind of messes things up. Because I read like hundreds of those memos, I read hundreds of these reports. That's the way we do it as managing directors. We're reviewing all of your work to make sure it's correct before it goes out to the client, okay? So we have the intrinsic value right there. There's the price, a little space. It's greater than space. There's the $78 of the current price right there, because the prices need to be right there. So I can check them like boom, right there. And then if it's trading at a premium discount, premium as 18, it's underneath the 22% that I normally use to check. If it's at 35 or 55 or something like that, I'd start to question your methodologies and your approach. And then you have your team right there. Do not put anything, do not put St. Mary's on here, do not put BizAd 123, because that makes it look like a school project as opposed to a professional project. And we want to fool your employers into thinking that you did this as actual work in an employment environment, not in a school environment.
Are the teams the same teams we do for our presentations?
Yeah,
Okay.
yeah, it's 3.
Okay.
Okay, and if you have 2, I had one student last semester, he was odd man out, but he said, I can do it. I'll do it myself. I can do it. I said, fine, I'll work with you. We'll work together. We'll do it together. And then I've had some students that say, well, I want to be in a group of 4. Well, that doesn't work, because usually the 4th person doesn't do anything, okay? So it just basically messes up the psychology. I've been doing this for a long time.
Okay.
So the
you
4th
have
person,
4 and
yeah, so what it will do, okay, so how many people have 1 person in their group? Okay, that's good. How many people have 2 people in their group? Perfect. So the people who have 4 people in their group and the people that have 2 people in their group, you need to swap out one of your persons if you have 4 people in your group and give them one of your persons so that you can work in teams of 3. It's the optimal number of people within a group, psychologically and analytically, okay? Any people with 5 people in their group, that's really messed up. That means 2 people aren't doing anything, okay? Potentially even 3, okay? All right, second page, here's your outline. Okay, here's the overview. I've only been doing this for like 20-something years, so I know exactly the behavior of a student, okay, the psychology, particularly group psychology and groupthink, okay? So here's your outline and your overview. Then you have a little company background, okay? Then you're gonna have the leaders. The order of the presentations that you have shift a little bit. So you may want, before you go to production or you go to present, you may want to have me take a look at it. So if you need to add any slides or rearrange any slides, we can get them in order before you do the presentation. Here you have the leadership. Is the leadership important to understand the value of the security? Yeah. Does management have a direct or an indirect impact on the value of the firm? Direct. They make decisions. So you need to know what the person's name is, what their title is. We're doing Bank of America. Bank of America used to source from Berkeley, Stanford, like Wells Fargo, they source directly from graduate schools here in the Bay Area. But when B of A moved away, they started pulling from the East Coast. If you look at JP Morgan, you look at Goldman Sachs, so you gotta get an MBA from an Ivy League or go to a law school, in an Ivy League to actually go work for these people. So the leadership gives you a good idea of the culture of the firm, who these people are. What you'll find out too is that there's not a lot of diversity in some of these top banks. There is some diversity, but you don't see any African Americans or Hispanics. There, particularly African American women or Hispanic women, and you do see some women, and actually women have started to move into the senior ranks of these large multi-billion, trillion-dollar banks over the last 5 years, from what we noticed. And you're also going to want to give us the number of years that they've been with the bank, and if you can give me where they were before, maybe a couple where they were prior to Bank of America, that would be awesome. That would give me a really good view very quickly to know what their cultural and leadership mindset and style is like.
I'm just curious, since you brought it up, is there any trend that going to be moving towards more like diversity in executive positions in these banks?
There's always going to be some type of class ceiling. Obviously, where you went and where you grew up, and what your age and gender and race. There's always going to be that. But there has been some concerted effort to move in that direction. I think when the bank heads were being grilled by the Senate, about some of the misappropriation of funds and some of the monies that had been misappropriated, and not too recently. They did ask those questions about gender diversity and if the banks have been moving in that direction. Am I distracting you? No? Oh, I just keep hearing a clicking sound and it's very distracting. Okay, cool. Yeah, they're moving in that direction, but you're not seeing a wholesale effort, for more gender equality and diversification at the most senior ranks, but you are seeing more now than ever before. And I'm sure as your generation moves into industry, you will be making that a priority to make that change, from what I can tell of your generation. Okay. And then the SWOT analysis, strengths, weaknesses, opportunities, and threats. It's got to look exactly like this. Okay, this table. It's got to look exactly like that. Okay. with the bullets and everything. We spent a lot of time editing these things. I mean, a lot of time editing these things. I can't promise that all of your decks are perfect, but I did try to throw away any of the decks that were submitted that had flaws in it or did not conform to the presentation standards. I can't use them, okay? So I just throw them away. And then you have the industry leaders. Okay, you have a table. I would have reformatted this table. Sometimes I make recommendations on editorial corrections to these things, and the students go back and they don't make the corrections, and then they go to production, thinking that the report is perfect and they can go to production. Where I don't, personally, I don't think you've been trained in producing perfect marketing product, okay, based on standards of review from senior level executives, okay? You're gonna be reviewed constantly, you're gonna get feedback, you're gonna have to go back and make corrections until the thing is perfect, okay? And if you produce something that's imperfect, it's gonna be an issue, okay? I'm just kind of warning you now. It's kind of you guys are so close to graduation and moving into the workforce that we have to start talking about the truth and reality of the situation. Yeah, go ahead.
Does the order of like the
Banks?
material matter? No, because like for example, industry leaders for me was on like page 3.
Yeah, I would have to take a look at it and then look at the order. Usually it goes from kind of a macro view and then down into the analysis. So it's broken up basically into sections. But let me take another look at it, and then I might reorder it a little bit. But some of them are a little out of order. But that's a great question. And then you have the banks, okay? Basically by asset values, okay? Now I'm not a big fan of saying 2.4 trillion and then saying trillion 4 times after that. You only need to say it once, just as long as it's aligned correctly. You only need to say it once. So less is more in these presentations. So if you look through these presentations, there's not a lot of writing in them. It's very brief. These things take 8 minutes to go through. If you go to actually the best presentations are 5 minutes. If you go to 8, it's a little too long. If you go to 10, you don't know what you're talking about. Okay, you're basically just making stuff up. All right, and you're reading from every slide instead of talking from the slide and presenting the major takeaways. So you weren't prepared for the presentation, basically. And then I do like the organizational structure of the firm that basically lays out the major divisional lines, and then underneath it, it gives you revenue contributions by these functional lines within the companies or the product lines within the companies. And very quickly you know where the majority of the revenue is being generated by the product mix in the functional line of the company. I do like that page. So very quickly I can see it. There are some that actually show operating segment breakdowns. It's a little redundant. And I do like a page on I don't see it, is the products and services that are provided. So when you're doing analysis of these companies, you're looking at what divisions and what services, what products are contributing the most to the revenue of the company. Then the second is what products and services specifically make up a significant portion of the revenue that's being generated, but also revenue growth in the company. Is the company innovative? And is it inventing new products and services to drive future revenue growth, such as fintech products and payment systems using technologies? That's like the next cutting edge area. Maybe even cryptocurrencies, but I don't think any of these banks are there yet in regards to that. Cultures and value, that should have been moved up front before the SWOT analysis. Okay. Oh, here's the products and services right there. It's a little out of whack. Products and services, what I usually like to see are asterisks next to them, so that 3 or 2 asterisks basically identifies those product lines that are generating the majority of the revenue or growing the fastest. Okay, and I usually have that as a note at the bottom of the page. Okay. Then we get into the financial analysis, financial ratio analysis, to determine the overall financial condition and position of the firm. Okay, this is basically the first step in fundamental securities analysis. So So you look at the financial ratios, not only for the target company, but also for the direct competitor, the peer group, and the industry. Now, a lot of students, what they'll do is they don't know how to, even though I've gone through it like 3 times, how to calculate the weighted average, peer group. They'll still take that out and put in like another bank, or they'll put in all the banks. Okay, I'll walk you through how to calculate the weighted average peer group financial ratio so you can do it the right way. Because the peer group financial ratios is the #1 financial ratio that you're going to look to as you compare the financial ratios against the direct company, the target company. So the first thing you do, this is really, really important, you have your financial ratios, and you have 2 pages of financial ratios to give you a broad enough sample of financial ratios to get a true picture of their overall financial condition and position. And the financial ratios are categorized, okay? So very quickly, and you need to probably focus on this, because if you don't, you're not going to get it, okay? So you need to focus. So for example, the first one is the, you could use ROA, ROE, but then this one, they used net margin, okay, which is also emerging. So the net margin, you can see for JP Morgan in this case, was 24.4%. It was greater than Wells Fargo, which is the direct competitor. That's good. And then you look at the peer group, which was 20. JP Morgan's net margin is significantly higher than the peer group. So that's actually excellent. And then it's significantly higher than the industry. So what we did was we gave it a condition of good. There's 5 conditions. You can't make up your own conditions. It's not like totally rad or excellent or these ratios are bad. It's like, no, they're either excellent, good, above average, average, below average, or poor. Okay, that's basically the coding systems that we use to code these things. So once you put all the data in, you go line by line and you basically code them. Once you've coded them, you step back and you go, oh, how many averages, how many goods, how many excellents are there? Well, the net margin's good. The ROA is actually pretty good because it's at the peer group. So I wouldn't have done average, I would have done good there. So that's a miscode. It looks like the ROE is significantly higher than the peer group. That could actually probably be excellent along with net margin. Debt to equity ratio, let's see, they're using about the same amount of leverage than almost the same as the direct competitor in the peer group, and obviously using more leverage than the industry. I would probably say that leverage is, I could justify good. Too much leverage is bad, but just enough leverage right around the peer group means that your capital structure of the firm is optimized, and you're probably minimizing the weighted average cost of capital and maximizing the spread between return on your assets and the return and the cost of your capital. So I would probably say good there. Interest coverage, how much earnings do you have to cover your debt payments? Again, another leverage ratio. Theirs was 5-to-1, which means they had 5 times more cash, earnings to be able to cover all of their debt payments, which is excellent, but they put good. So I would go through here and say, okay, how many goods, excellence? It looks like it's excellent, and put excellent right there. So the first set of the financial ratios, the overall financial condition and position of the firm is excellent. And it should be. JP Morgan is probably the best run bank of its peers, okay? And why are we even doing these banks? I mean, because these banks basically control over 50% of all the assets in the economy, in the banking system. 50%, the top 5 banks control over 50% of the assets within the banking system. That's an oligopoly, okay? It's an oligopoly thing, all right? So you basically have major players that basically control the majority of the industry. It's a competitive monopolistic position, oligopoly. It's not a cartel, but it is pretty close to, 5 firms controlling over 50% of the assets, okay? And then the rest is split amongst the smaller banks. And then you have the other financial ratios. You put them in, calculate it, you give it the codes, and then you look at the overall assessment, and then you put the final overall condition and position right there down at the bottom of the page. So now you've done the accounting stuff. Now you're ready to move into the evaluation stage. The first valuation is the technical analysis. Although technical analysis is not an intrinsic valuation methodology, but it is a valid way to determine where the future stock price is gonna go based on historical trend. Okay, and you've already learned how to do, you know, the support, the resistance, the upward trends, all that stuff, how to use MACD and RSI to be able to look, you know, at momentum in the pricing going forward. And if it looks like, and you gotta go back 3 years to most students, when they first attempt this, will only do like a week or a month. Well, a week and a month doesn't give you a trend. You gotta go back 3 years, okay, to get a true picture of the overall trend and ability of the management to perform and push the stock price forward over time. And as you can see, this is JP Morgan. You see the support there, there's the resistance, it's in an upward trend, and basically what we did was we just trended that out for another year, and said if this trend continues for the next year by, you know, May 1st of next year, the stock price would be at, and unfortunately they don't have the target price above, there should be a target price and a current price, and then it gives us the premium or the discount. So you gotta calculate it. But it's just pretty straightforward. You just, you know, straight line it out. If the trend continues, the stock price will be at this target price in a year. Calculate the percentage change. That's gonna be the premium, okay? Unless it's in a downward trend. But most of the bank stocks have been in an upward trend, not a downward trend, because we're not moving into a recession. And then you get into the first fundamental intrinsic stock valuation methodology, which is the perpetuity, okay? And then you're gonna have your CAPM over here when you do the presentation. I will ask you how you calculated the CAPM. Some people are honest, they just say, I don't know, okay? Or we didn't do it. Or we copied it from the PowerPoint presentation that you gave us, which was on Wells Fargo, not B of A. So they'll just throw stuff in there without even knowing how to do CAPM after basically 12 weeks. 13 weeks, 10 weeks in the class, they still don't know what CAPM is, or how they did it, or what a beta is, okay? And then you have your earnings per share. You're gonna have next year, we're gonna value the stocks using 2020 EPS, because we're already almost halfway through 19. So we're gonna need 20 EPS projections, 2019 and 2018. And then you're gonna give me the percentage change underneath it. So very quickly I can see what the change in EPS has been and what your projection is of EPS for next year, okay? And then you have your sensitivities. Here, you got your sensitivity chart. The discount rate or expected return is gonna go from low to high so that the valuation goes from high to low, okay? And you can calculate the expected returns or discount rate sensitivities will be determined based on long-term expected returns on the market, the expected return of the equity using CAPM, and the weighted average cost of capital for the firm. So we'll go through the three and I'll show you how they all kind of cluster together, and you can use them as sensitivities, okay? It's kind of cool. And then you have the stock value there, the intrinsic value, you got the current stock price, and you got the premium or discount calculated there. So very quickly, I can go right to the data, check it, and see what's going on. Then we flip to the Gordon growth model, which is the next page. This doesn't change over here. In the Gordon growth, I'll show you how we do the Gordon growth matrix, which is the expected returns of the discount rates here with the growth rate scenarios. You may want to go ahead and make a note that these banks with multi-trillions of dollars in assets under management are not going to be able to grow their earnings per share forever at 2 to 3%, probably 1%. So we'll probably use that and some midpoint, discount rate to get the intrinsic value used. And if I like to do the 2 and 3% growth rates there, so I can see maybe upside potential in the future if the bank has some type of earnings surprise, or there's some kind of macro positive shock from low interest rates or tax cuts or something like that. And then the next one is the multiple approach. I actually like this multiple table over here and the valuation over there. So this multiple table, you're going to be giving me the 2020 PE multiples projected for the peer group. Then you're going to give me PE multiples as of today with some forward-looking guidance, and then you're gonna give me 2018 PEs. Those PEs, along with the other PEs that we've calculated, will allow us to be able to come up with these price earnings multiple projections, the sensitivities. And here, you're not gonna go from low to high, you're gonna go from high to low, okay? The higher the multiple, the higher the valuation, okay? So everything's consistent, all right? And then you're gonna give me the stock value or the intrinsic value using the multiple approach compared to the current price and the premium. So I should be able to whip through this presentation really quickly. And when you come in and do your presentations, I'm gonna be whipping through this thing so fast and making comments on this thing, just checking everything, and then I'll get it back to you, and you gotta go back and make all the corrections and then come back and show it to me again, or as many times as it takes to get to a perfect presentation. So when you go to production, you're not gonna find mistakes after the fact and after we printed 7 times and cost you $70 instead of 7, okay? And then you have the discounted cash flow model. I don't like the weighted average cost of capital up here, I like it over here. I like the valuation range down here, and I like this intrinsic valuation table up here. So there's a specific place here that I like to look at. Here's the earnings per share for the 5 years plus the terminal value. Here are the growth rate and the cash flows. Here are the discounted cash flows. And I should be able to add up these discounted cash flows to get the present value, get the present value, intrinsic value, using the DCF. Put that up there, compare it to the current stock price, there's your premium. Okay. This is a little out of order. I will ask you where you got the weighted average cost of capital, how you calculated the capital structure. We will do it in class. Now that you know where to get it off Mergent, you should probably start collecting some of this data, particularly the value of the debt, long-term debt, and the value of the owner's equity. That's how we're gonna get these weights, okay? And then the cost of the debt, that's here. Usually what I do is I look at the current yield to maturity on their bonds as a proxy of the cost of their debt. Currently, if I can find historical bond issuance and what the yield to maturity was when they were issuing those bonds recently, that'll give me a proxy cost of debt. And I plug that there, and then I calculate the return on equity using the CAPM. Okay, so it's got to be consistent throughout the whole. And I'm constantly checking for consistency because everything ties together and builds on each other. And then the WACC. Okay, and then, as you know, this is very similar. You have your 3 scenarios, right? Your weighting scenarios. You've got your intrinsic values. You calculate the weighting scenarios, and then right underneath it, this is the second time that I've seen the recommendation, final recommendation, since the very first page. Okay, so I'm starting to hit you between the eyes and try to drive. Basically, you're trying to convince you that this is a buy recommendation. Okay, with the summary data. Okay, then you have your final intrinsic value compared to the current stock price and the premium, which is 18%, which is within the reasonable range. And then on the back, you're going to hit me with the buy recommendation, the intrinsic value compared to the current price. They don't have the premium calculated here, and they really don't have the table set up, where you have the indexes, the ETFs, and the stock. And again, it's just one index trade, one ETF trade, and then the stock trade for a total of 12 trades. On the back here, you're going to put your references. Now, this is a bad reference, okay? Do you know where these came from? No. A lot of students, they would just copy and paste the URL. We don't know what URLs are. We can't decipher them. So you just put the names in. And I would put them all in. I would put Mergent, I would put Dun & Bradstreet, I'd put Value Line, I'd put S&P, I'd put Morningstar, I'd put, Bank of America. Yeah, that's actually a good one like that. Y-Charts is a good one, NASDAQ's a good one, Edgar. The more references, if you have a lot of references, what does that tell you about the diligence of your research? It's thorough, exactly. And you double check your numbers. What I don't do in this class, which I make them do, everybody do in my other class, is I would have titles. I would have you would be listed here, your names would be listed here, your titles, portfolio manager, equity research analyst, CFA, MBA, CPA, all of your designations, PhD, and then you would actually sign it and date it so that the report is signed and dated by you. You looked at it, you signed off on it, okay? So that any recommendations that are being made from you are the best of your capability, and you're liable as a CPA, CFA, PhD, CFO, anybody who produces these things, you're signing off on the accuracy of the report. You can't sign off on everything. There's probably disclosures there, but if you can sign off on your research, that basically proves that you have confidence in your research, and it's the best research that you could do based on the information in the time period that you had available to you. Okay? Questions, comments? Okay, you ready? Okay, cool. How much time do I have? 22 minutes? Okay, so what I'll do is I'll spend, I'm gonna put on the inside job, okay? Because I gave you the movie review worksheet. And what I'll do is during that time period, I'll call you up for the packages that I've already graded. And then I'll probably have the rest of them done on Thursday. Okay? Yes?
Can I get another movie review worksheet for
Yeah,
this?
absolutely.